Today, crypto prices move lower as the Fed's rate decision looms. President Trump's World Liberty Financial says it sold $550 million in tokens. And HFR's Kenneth Hines breaks down the launch of an expanded strategy classification system focused on the crypto and blockchain space. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Crypto prices in the red, with Bitcoin and Ether dropping about 2% ahead of tomorrow's Fed decision on rates. As of noon, Bitcoin was trading around $81,600, while Ether fell further below $2,000. Solana dropped nearly 4% to $122. The Fed is expected to hold rates steady, despite some recent encouraging news on inflation, which retreated last month. An escalating trade war threatens to cause prices to rise, however, on a wide range of consumer goods going forward. Taking a look at crypto-focused stocks, as of around noon, Strategy fell about 2% with the broader market. The world's largest corporate Bitcoin holder announced today that it plans to issue a major stock sale to fund more Bitcoin purchases. Specifically, the company plans to issue 5 million shares of a new class of preferred stock known as Perpetual Strife. This comes a day after the company reported its smallest Bitcoin purchase since it started buying the cryptocurrency in 2020. Strategy Executive Chairman Michael Saylor took to X yesterday detailing the company's latest purchase of 130 Bitcoin for around $10.7 million, or just under $83,000 a coin. Saylor noted that Strategy now holds just under 500,000 Bitcoins worth about $33 billion, with an average buy price of about $66,300 per coin. And Coinbase was trading lower by more than 4.5% as of noon, even after Bernstein initiated coverage of the stock and said Coinbase is primed for strong returns ahead, thanks to President Trump's support for the industry. The firm has an outperform rating on Coinbase and a price target of $310. That is more than 64% from where shares closed yesterday. Bernstein argues that Coinbase remains the dominant platform to ride the tailwinds of the Trump administration's goal of making the U.S. the crypto capital of the world. Okay, let's talk about the top stories. President Trump's World Liberty Financial says it has sold $550 million in tokens. The company said yesterday that it raised $250 million in its second token sale. The project launched in October before Trump's election victory, and according to the company, it raised $300 million in its first sale. The project is a venture backed by the First Family that describes itself as a type of crypto banking platform. In a document published at the time of the project's launch, World Liberty Financial said the Trump family could take home 75% of net revenue. President Trump is affiliated with other crypto projects as well, including his own and First Lady Melania Trump's meme coins. Those were launched in the days leading up to the inauguration, before the SEC declared in February that meme tokens, by its definition, are not securities. Finally, sticking with the SEC, the agency continues to rethink its level of oversight of the crypto industry under its new leadership. Yesterday, Acting Chair Mark Uyeda addressed concerns over a rule proposed in early 2023, focused on how investment advisors would custody customer assets, including cryptocurrencies. In his remarks at an investment management conference, Uyeda said some had expressed significant concern with the, quote, broad scope of the proposed safeguarding rule for investment advisors, which would extend the custodial requirements to virtually any asset, including crypto. He added that given the concerns, he asked agency staffers to consider changing the proposal or withdrawing it entirely. The SEC has been reevaluating its crypto approach under the new administration with a newly formed crypto task force in place. So far this year, the agency has taken several actions supportive to crypto, including revoking a notorious accounting rule that made banks treat digital assets as a liability on balance sheets. All right, for our main story today, HFR, which offers hedge fund data and performance reports for investors, launched an expanded strategy classification system for hedge funds and alternative investment products focused on the crypto space. I spoke with Kenneth Hines, the president of HFR, a few days ago about the announcement and what people can expect.
So HFR is expanding its crypto hedge fund indexing and classifications, essentially getting more specific about the types of subcategories that go into crypto hedge fund. Tell me why you're making this change and what it means for your business.
It's an exciting time because the industry has evolved a lot. We first launched these indices back in December of 2017. So it was a bit ahead of its time, I guess, 8 years ago. And really what we do is, and I think it's very important for investors to understand the complexity and sophistication of the things that we're doing. And essentially we're unboxing the black box, meaning we're outlining what it is that people are doing so that investors can take advantage of these advancements in sophistication and access these really high returns, but also use it to manage the volatility of their investments.
How do you choose what to prioritize in this new classification process? What areas of crypto are most pressing when you're going through this?
Yeah, the managers are providing the information to us, and we have basically culminated a 2-year project of really analyzing the descriptions and the performance of these funds so that we can have this cutting edge system for really allowing investors to understand all these different nuances, because it's not just about beta anymore. And maybe it was that in 2015 or 2017 or 18, but there's so much more that people are doing now, and it's so interesting that we had to sort of bring this forward so that people can use that to make intelligent decisions about how they're investing in crypto.
What does this new classification system mean for investors or for those in the crypto space, especially if they may not be familiar with how hedge funds interact with crypto?
Yeah, I mean, it's a huge growth area for the industry over the next 5 to 10 years. I mean, you take the total size of the crypto industry, call it $2.7 trillion. The total size of the hedge fund industry, call it 4.3, $4.4 trillion. And the total capital invested in crypto hedge funds is just a fraction of that. And so this is a huge area of growth. And it's a great way for investors to access these sophisticated strategies by people that are very specialized in this type of investing, and gives them an option of something that's different than a totally, a very simple ETF or something like that, a passively managed strategy, which is a part of it. But there's also more sophisticated ways. And February is a perfect example because we've seen 25% reversal, from the highs in all of these cryptos. And so, yeah, the returns are great when you look over a few years, but you're going to have really volatile months. And that gives investors a better way to invest, managing that volatility, but still accessing great performance.
What does growth or the evolution of crypto hedge funds look like? You're making this change because there are more specialized funds, but what does the space look like overall?
Yeah, it's really specialized, innovative. It's really the most innovative part of the hedge fund industry is what people are doing, because all of the mechanisms to trade this continue to evolve. There's arbitrage strategies, and there's so many different players that have come into the market. It still is primarily most of the investment in crypto is still held by individuals and institutions, but we're really seeing this as a growth area. People are adding dedicated specialized funds along the lines of the strategy classifications, new indices that we're launching. And you also have larger established $20 billion funds that are adding exposure on the multi-strategy, and they're adding portfolio sleeves. They're trading these actively. And that's just going to continue to grow over the next 5 years.
How do you expect the changing regulatory environment play into the space, especially given President Trump's pro-crypto stance?
Yeah, it's a risk for sure. I mean, you're going to continue to see more oversight of the industry, and that's going to evolve as well. But I think it's going to evolve more favorably than what it has really over the last 5 years, because I think the new administration recognizes this as an asset class and a place that we as a country really want to be. And I think they've used the word the crypto capital of the world, which is something that's, I think, very, 5 or 10 years from now, that will be something very valuable to have established at this point in 2025, and seeing how that continues to grow. But this is going to go from a very small niche specialized industry to something much more mainstream over the course of the next decade. And I think the new administration and the regulators want to see that growth happen. They want to mitigate some of the risks associated with some of the structural components of it, but continue to allow the industry to grow and evolve in the direction that they see it going.
Real quick, Ken, on markets, how do you see hedge funds?
From breaking news to the day's biggest controversies, shedding light on the world's top headlines. Detailed analysis on the stories that matter the most to you. Catch it
on
all
Crypto
on
Kings.